Welcome to my second video ranking the single stock Roundhill Weekly Pay ETFs from very bullish to very bearish. Roundhill has 20 funds that are based on single underlying stocks, and these utilize leverage, so you should be bullish on the underlying stock if you want to hold these ETFs. I hope this video will be informative and help you decide if you want to continue to invest or start an initial investment in a particular Roundhill single stock ETF. But remember, this is not financial investing or any other kind of advice. These rankings are not advice to buy, sell, or hold an investment. Let's get started. If you're not familiar with the Roundhill Weekly Pay ETFs, they're based on an individual stock. Their goal is to pay weekly distributions, and they're trying to match 120% of the stock's calendar week total return. So that means these should outperform or underperform the underlying stock in a given week, making them a high-risk strategy. The rankings I use today come from Fidelity and the LSEG StarMine Equity Summary Score. Here's an example for Intel. You can see that this rating is a 5.6 out of 10, or the neutral category. And here you can see the analyst research used in this ranking, as well as the history of the ranking. This is a very brief explanation of how this summary score is built. It's not just an average of opinions that treats everyone equally. It rewards those who have done a better job. First, it normalizes the rankings to account for a lot of analysts that simply say buy or hold everything. Then it weighs their 24-month track record of accuracy within that sector, which is essentially the batting average for how often they get their calls right. Then it force ranks the stocks to ensure an equal distribution across the spectrum. This way, everyone's not just bunched up in the middle. There are some important limitations. The first being that this is not a buy or sell recommendation. It's not going to predict the future performance, but it is giving you an aggregated sentiment from a lot of analysts. And as I showed in my very first video on this topic, other trading platforms such as Robinhood or Vanguard can show very different analyst rankings. And the scores I'm going to talk about today were recorded during a particular moment of time on May 13th, 2026. And they certainly could have changed by the time you're watching this video. Here's a look at how the rankings break down and the category assigned to each numerical rating. The weekly pay Roundhill funds don't have their own individual rating, so I'll be rating them based on the underlying stock. And I'll keep them in order even within each tier. So a stock in the top left of a tier will be rated higher than stocks further to the right or down below it, even within the same tier. And now for the rankings. But first, a note about ARM Holdings. It does not have an equity summary score rating, just like when I did the first video in March. So I put it at the top of the chart so that it's not assigned a tier, but just as a reminder that it's not been forgotten. Let's start in the neutral tier. We have Microsoft at 6.9, Google at 5.8, Amazon at 5.5, Strategy at 5.2, Meta at 4.6, and Uber at 3.4. Out of this neutral tier, if we look at all of the weekly pay ETFs and assets under management, Google, with about $90 million in assets, is the most popular weekly pay in this group. Here, we can see it's currently paying about a 45% distribution rate. If we scroll down and take a look at the distributions, we can see they bounce around a decent amount. A very, very low distribution of about 16 cents in early April, and recently at about 68 cents. If we go back and look at the rankings of assets under management, we'll see that Uber, also in this tier, is at the bottom of the list with just under 1.9 million in assets. And I believe that's significantly lower than it was when I made the last video in March. Here's a look at the price return performance of the underlying stocks in this neutral tier ranking. Year to date, we see that Google has done the best, up about 24%. Strategy is up over 17%. Amazon up about 14.5%. Meta and Uber down about 9%. And Microsoft down about 17%. But if we zoom in and take a look at the 1-month chart, we see that all of them except for Meta are positive. Meta's down about 3%. And Strategy is the big 1-month winner, up over 37%. Back on the tier ranking list, let's take a step down and look at the bearish category. We have Palantir at 3.0, Berkshire Hathaway at 1.9, United Health Group at 1.8, Robinhood at 1.4, and Tesla at 1.2. The bearish tier happens to have 3 of Roundhill Weekly Pay's most popular ETFs. Palantir is number 1, only trailing TOPW, which is an aggregated fund. The HOOD fund is not far behind at $121 million, and Tesla at $113 million. PLTW has a current distribution rate of about 62.5%. Its distributions have been on a downward slope, not a great looking graph. HOOW is paying about 25% currently, and its distribution graph is also on a downward trend. TSLW is paying about 48%, and just like the others, its graph over the past 12 months of distributions has shown a downward trend. This is the year-to-date price return chart for the underlying stocks in the bearish tier. United Health is leading the way, up over 20%. All the others are negative. Berkshire down about 3%, Tesla down about 4%, Palantir is down a whopping 25%, and Robinhood is even worse, down almost 32%. If we take a look at the 1 month to see how things have been more recently, it's a much different story. Tesla up over 27% and United Health up over 29%. Robinhood up over 8.5%. Berkshire up about 1% and Palantir down about 2%. Now let's move up to the bullish category where we have Apple at 9.0, AMD at 8.5, and Netflix also at 8.5. If we check the assets under management of this group, AMD is the most popular with about 78 million in assets. The fund's current distribution rate is about 58.5%. If we take a look at the distributions, we see something different from the previous examples. This is showing a significant uptrend. And if we take a look at the 3 funds in this category, year to date, we see that AMD is just killing the competition, up 105%. Apple is up about 9%. Netflix is down about 7%. If we take a look at the 1 month chart, AMD up almost 82%, Apple up almost 16%, Netflix down about 15%. Now we drop down to the worst tier, very bearish, and we only have 2 stocks in this category, Alibaba at 0.8 and Coinbase also at 0.8. The popularity of these 2 funds based on assets under management is on the low end. COIW has about 44.5 million, while the Alibaba fund, BABW, is second lowest at 2.4 million. COIW pays about a 56% distribution rate as of the time of this video, and its distributions have been trending dramatically down. I used to own this in my small account margin strategy, but I sold the shares months ago. Here's a look at the year-to-date price return for these 2 underlying stocks. They're both down around 11%. If we take a look at the 1 month, it's a better picture. Coin is up about 16.4%, Alibaba up about 13.7%. And that leaves us with our final 3 funds for the very bullish tier. Leading things off is NVIDIA with a very impressive 9.7 equity summary rating. Costco is at 9.2 and Broadcom is at 9.1. NVDW is one of Roundhill's most popular weekly pay ETFs, with about 132 million under management. Broadcom is a good bit lower at around 49 million. And Costco is one of their smaller funds. COSW only has about 13.4 million. NVDW has a current distribution rate of about 25.4%, and its distributions look pretty good. The last couple of months have been fairly flat, kind of bouncing between these 2 levels of around 20 cents and 38 cents. AVGW, the Roundhill Broadcom ETF, is paying about 47.5% distribution rate, and its payouts have also been kind of flat. Finally, COSW is paying about 23%, and its distributions have also been pretty steady. Here's the year-to-date price return of the 3 underlying funds in this category. Costco leads the way at about 20.8%, followed closely by NVIDIA at about 19.5%, and Broadcom at a little over 18%. At the 1 month view, NVIDIA is leading the way up over 20.5%, Broadcom up almost 10%, and Costco up about 4%. TOPW, the top weekly pay ETF, is Roundhill's most popular in this category with over 179 million in assets. This is the ETF that took the place of WPay. Top pays about 32.36% as of recently, and the difference between it and WPay are the holdings. If we scroll down and look at these, and then view all, we can see the difference between this fund and WPay. WPay held all of the weekly pay ETFs, whereas TOP does not contain all of them. Its distributions have been on a somewhat downward trend. So how do the funds in our tier list fit into TOPW? I've highlighted the Roundhill Weekly Pay ETFs that TOPW holds, and in my opinion, this slants positively. They have everything in the very bullish category, 2 of the 3 in the bullish, 4 of the 6 in the neutral, and 2 of the 5 in the bearish. So the weekly pay ETFs that TOPW does not hold slants towards the underlying stocks that the equity summary score is currently not very enthusiastic about. Remember, the old WPay held all of these funds. So at this point, TOPW seems to be in a better position than what WPay was in. Let me know in the comments, do you own TOPW or any of the other Roundhill Weekly Pay ETFs? And do you agree or disagree with any of these individual underlying stock ratings? And if you found this breakdown helpful or entertaining, I would certainly appreciate it if you'd like and subscribe. And remember, nothing I said here is any type of investment, financial, or other type of advice. I'm just a random guy on the internet, and you need to do your own due diligence for your investments. Check out the first video in this Roundhill series if you want to see how these ETFs compare to their rankings a couple of months ago. Good luck hunting those infinite dividends. Take care.